Stocks on Wall Street end the trading session lower after regional bank worries fuel a market sell-off. The Dow Jones sheds 300 points, Nasdaq loses more than 100 points. 10-year Treasury yield drops below 4%, hits the lowest level since April. Asian markets open lower, tracking losses on Wall Street. The GIFT Nifty is indicating a flat start for the Indian market. Crude prices fall to its lowest level since May, driven by a larger than expected build in the US crude inventories and mixed signals about India's purchase of Russian oil. Gold continues its record run on safe haven rush and the Fed rate cut bets. Infosys revenue beats estimates while margin was a miss. The company tightens the FY26 guidance band on expected lines. Wipro also reports second quarter earnings in line with expectations. All big five Indian IT service companies exceed muted street expectation in the second quarter. And in key earnings to track today, Reliance is set to report its Q2 FY26 numbers. CNBC TV 18 poll sees revenue at 2.46 lakh crores. The growth to be led by the O2C business. Jio's EBITDA likely to surge 16% and retail vertical EBITDA is expected to report a growth of 11%. Hello, good morning. You've tuned into CNBC TV 18. You're watching Power Breakfast with me, Madeline Mutiwala. Firstly, festive greetings to all of y'all. Let's look at what the Asian markets are doing this morning. Seems like a bit of a muted to a mixed signal is what we're watching out for in terms of the Asian markets. Most of them have opened up in the red, right? Look at the Taiwan index. That's down 0.6%. Hang Seng down 0.6% as well. Nikkei, that's also very muted in today's trading session. 0.4% of decline coming in for Nikkei as well. Shanghai, 0.3% of decline. So most of them have opened up in the red. Now, Nifty implied open. Let's look at that. Yesterday, while we saw the Nifty keep the momentum in terms of the gains, today Nifty implied open is also indicating a muted start. A bit of a red is what we could watch out for on the screens today. 0.2% of decline right now is what the Nifty implied open is indicating. But there are a lot of global cues that came in overnight. How is that going to be impacting our Indian markets? What are the stocks that you should be keeping an eye out on? F&O strategy that you should watch out for today. We have a team of research joining in with us. And before I go to our team of research, let me set you up for trade as well. Firstly, talking about the US markets, that's a bit of a sell-off coming in yesterday's trading session. Wall Street closed in the red. Whether you look at the Dow, S&P 500 or the Nasdaq, all these three indices were in the red, and this came in after there was some bad loan crisis that came in from some of these regional banks. Now, other than that, we also had commentary that came in from President Donald Trump. He said about the meeting with Vladimir Putin, the president of Russia, that could take place in 2 weeks or so. That's a highlight coming in there. So let's watch out for that in terms of more details that could come in there. Other than that, FIIs, they continue to be buyers in yesterday's trading session. So 997 crore buy coming in from FIIs, DIIs strong buying there as well. 4,000 crore plus buying from the DII front. Today we'll keep an eye out on a listing as well. We have Canara, HSBC Life Insurance that is listing today. So watch out for that one. And important cues in terms of result reaction that we'll be seeing coming in from some of these IT companies, Infosys, Wipro, LTI, Mindtree. Other than that, we also had Jio Financials that reported their numbers and Metro Brands. Keep an eye out on that. Important earnings to watch out for today. Obviously, we have Reliance Industries that is going to be reporting their numbers. Other than that, Havells India, India Cements, JSW Steel, L&T Technology Services are some of these companies. Keep an eye out on MCX. They were going to be levying some additional margins of 2% on silver futures. So we'll keep an eye out on silver in the world of commodities as well. And other than that, yesterday Nifty had a very good run, 25,600. Just below that mark is what the Nifty closed. Today, a bit of a muted session is what we're watching out for. But let's talk about the important stocks that you should be keeping on your radar today. For that, we have Gaurav joining in with us this morning. Good morning, Gaurav.
Well, let's start with some big names. First, let's talk about Infosys. When we look at net profit, that was a bit above our guidance. But at the same time, when we look at the revenue, the guidance for margins, they have actually, margins for the revenue growth, they have actually increased the lower end of the guidance from 1% to 2%. So when we look at this, street is not taking it in the positive way is what we are penciling in, because the stock which is trading overseas is down almost by 2%. When we talk about Wipro, let's also look at the numbers there. The Wipro's IT revenue that actually came in line with our expectation, and at the same time EBITDA margin that came in at around 16.7% versus our poll of 16.8%. Let's also talk about Sand LTI Mindtree. When we look at the numbers, net profit that came in at around 1,381 crores versus our pool of 1,227 crores, and at the same time margins, they also improved. They came in at around 15.9%. Let's also talk about Cyient. When we look at the net profit, that declined almost by 28% on a year-on-year basis, while revenue that declined almost by 4%. JSW Infra, that also came up with the numbers where we saw net profit actually declining almost by 3%, while revenue that increased almost by 27%. So there was a bit of a pressure in terms of the profit that company reported. Punjab and Sindh Bank, here we saw good set of numbers because net profit that increased almost by 23% on a year-on-year basis. And lastly, let's also talk about Metro Brands, because we saw net profit once again in this company being under pressure. It came down almost by 4% on a year-on-year basis. Apart from numbers, let's also talk about BEML, because company is going to collaborate with Kineco for manufacturing of aerospace and defense applications. And let's also not forget about Godrej Industries today, because company said that they are going to increase their stake in one of the subsidiaries, Godrej Capital, from 90.89 to 91.11. So definitely watching out on all these stocks for a treat today.
Okay, thank you so much for that, Gaurav. But time to go across to Sudarshan, who's going to tell us what to watch out for in the world of F&O. Sudarshan, yesterday 25,600 that we saw coming in for the Nifty. But today, what are we keeping an eye out on?
Good morning, Vinny. So after Big Bang Thursday, will we have Happy Friday? Well, the cues remain mixed. Positive part is that FIs have turned buyers both in the cash market as well as in the futures comfortably. But on the domestic front, the earnings that we have got from Infosys and Wipro both were mixed. Like TCS had earnings that were largely in line with expectations. Other mid-cap IT companies had reported earnings that were good, but Infosys and Wipro have failed to boost the sentiment. Yesterday, we saw Nifty crossing the level of 25,600, Nifty Bank approaching the record high. Now, ahead of Saturday, we have big earnings coming. HDFC Bank, ICICI Bank, RBL Bank, a whole lot of companies will be reporting earnings. So, I'm not sure if market will go over to the weekend with big gains. As far as GIFT Nifty is concerned, it's indicating a start with a minor cut, currently down almost 40 points. Now coming to the flows. Yesterday we saw FIs buying almost 1,000 crore in the cash market. DIs too remain on the buy side, bought more than rupees 4,000 crore. In the index futures too, FIs have bought more than rupees 5,000 crore. Now, longs exposure has increased to 14%. That's the highest in this series as of now. And also, they've added long positions of more than 12,000 contracts, reduced short positions of more than 13,000 contracts. Now, on the options data, one call option, which was the most active, was 25,800, where we have seen addition of almost 38 lakh shares in the open interest, with premium rising to 23. And 25,500 call has seen shedding of almost 39 lakh shares in the open interest, and the premium has fallen to 163. On the put side, 25,500 and 25,400 put were the most active ones. So support for Nifty now moved higher to in the range of 25,350 to 25,400. Resistance 25,670. For Nifty Bank, support has moved higher to 57,000 and resistance to record high around 57,600. One stock remains in the bank, Samant Capital. Some of the stocks that have seen fresh longs, Cyient ahead of earnings had seen fresh longs. We'll have to see how the company reacts, and Titan remains in the focus. Yesterday also, there was a fresh long in the stock.
Okay, thank you so much for that, Sudarshan. Important cues in the world of F&O. But let's move on and talk about Reliance Industries Q2 expectations. What are we watching out for this time? Let's go across to Sonal for that.
Good morning, Winnie. Well, good set is expected from Reliance Industries this time around, but do remember the stock is flat in last 1 year and trades at around 21 times FY27 earnings. In terms of a quarter-on-quarter expectation, good growth expected. Revenues expected to come in at 2.46 lakh crore rupees. There's expected to be an EBITDA growth of around 4% to come in at 44,511 crore rupees. Margin expansion to 18.1%. Profits, however, will see a decline on a reported basis by 22%. But do remember, last quarter had one-time income of 8,924 crore rupees because the company had sold stake in Asian Paints. So that's why optically the numbers will look lower. In terms of what is expected in terms of internals, growth will be led by the oil to chemicals business this time around because refining margins, they have improved. The product cracks, basically diesel cracks, be it petrol cracks, all of them have seen an improvement. Also, the retail growth will come back because of GST cuts and higher revenue per square feet. There could be some weakness in the oil and gas business. That is because of lower prices that we'll see in this segment. Jio's EBITDA is likely to surge 16% on a YOY basis, 2% on a sequential basis on higher ARPU because of the tariff hike that came by. And retail EBITDA is expected to report a growth of 11% on a YOY basis. So we'll see this 45,000 crore mark, 500 crore mark in terms of EBITDA will be a 5 to 6 quarter high for Reliance this time around. So watching out for good numbers this time. And yes, we'll be here with the analysis when the numbers hit the exchanges.
Okay, Sonal, thank you so much for that. Surely you will be there when the number hit the exchanges and you will keep us updated with that. So thanks so much for that. But let's move on to the top two IT giants, Infosys and Wipro. They reported their numbers yesterday post-market hours. Infosys kept its upper end of the guidance unchanged, while Wipro's margins and revenue was in line with the estimates. What more are we watching out for this morning from both these stocks? Let's go across to Rima to give us that. Rima.
Hi, good morning. So Infosys ADR was down over 2% overnight. So that gives you an indication of the market response to the Q2 numbers. You know, what the street is disappointed is that the upper end of the guidance was not increased despite a strong H1. So the earlier guidance was 1 to 3%. Now the company is talking about 2 to 3%. So they have the confidence to raise the lower end. 1 has become 2, but the upper end has remained unchanged. And this is despite a strong performance in the first half. In Q1, the company did 2.6% revenue growth. In the second half, 2.2%. And the ask rate, if the company has to just do a 3%, that's the upper end of the guidance, it basically means the company is not growing in Q3 and Q4. So what are these kind of headwinds that the company sees? On the whole, Q2 was fine. Revenue beat, margins slightly lower than street expectations. EBIT margins came in at 21%, expanded 20 basis points sequentially, but lower than consensus expectations. Wipro ADR also slipped close to about 2.5%. Here, Q2 numbers were in line with expectations, but I think the positive is that the Q3 guidance points to an improvement. The Q3 guidance stands at minus 0.5 to plus 1.5%. At the midpoint, the company will deliver 0.5%, which is better than Q2's performance of close to about 0.3%. So that suggests some sequential improvement. EBIT margins at 16.7% were impacted on the back of a client bankruptcy. If you strip that out, EBIT margins came in at 17.2%, largely similar to what they did in the prior quarter. Back to you.
Thank you so much for that, Rima. But on that note, also listen into what Infosys management had to say on the impact of the new H-1B visa rules and hiring, which was strong during this quarter.
Our US workforce, the number of people that require Infosys sponsorship for immigration is a minority. So the majority of the people don't require it from our perspective. Second, we built a large number of centers and hubs which are focused on digital, on innovation, on technology and AI in the US. We have relationships with universities, we have a training facility there. With all of that in mind, we are clear today that we will work with our clients without any disruption to their services and into the future. For this quarter, our net addition is already at 8,000. We had given a guidance in terms of the fresh hiring for the year, and we had said 15 to 20,000 what we expect. We have hired in the first half 12,000 plus freshers already, so we are well on our track to hire close to 20,000 this year.
Okay, on that note, let's just sip into a very short break, because after the break we'll get you the cues from Wall Street. Stay tuned in for that. Welcome back. Thanks for staying tuned into Power Breakfast on CNBC TV 18. Now let's move on and talk about the US markets. The Wall Street ended lower. This came in over concerns of bad loans seen in the banking stocks that took a hit. Investors also juggled the US-China tensions along with the ongoing government shutdown. Let's go across to CNBC's Bertha Coombs, who's here to give us a wrap on what happened on Wall Street.
U.S. markets were down across the major indexes in Thursday trading, reversing earlier gains when bank stocks started to decline over fears about bad loans. The Dow falling 301 points, the S&P 500 down 42, while the tech-heavy Nasdaq slid 108 points. Regional bank stocks sent markets lower on Thursday over concerns about the health of their lending businesses. Shares of two big regional banks, Zions and Western Alliance, both falling more than 10% on the day. Zions said that it was facing a sizable charge over bad loans to a couple of borrowers, while Western Alliance alleged that one of its borrowers had committed fraud. That, along with some recent bankruptcies in the auto sector, are raising broader concerns among investors as to whether instances of bad loans might be a sign of a coming crisis. And Nestle announced Thursday that it is cutting 16,000 jobs, or roughly 6% of its workforce. The world's largest packaged foods company says that the move will help it cut costs and win back investor confidence. The maker of Kit Kat bars, Nespresso, and Perrier is trying to reverse stalling sales growth as it faces U.S. import tariffs. Shares of Nestle shot up almost 10% on the Swiss exchange after that announcement.
Thank you so much for all that, Bertha. But shifting focus, the former Federal Reserve Vice Chairman Roger Ferguson says that a majority of CEOs expect a major transformation of jobs due to AI in the next 4 to 5 years. Listen in.
For a period of time, they were appearing to expect a recession. That fortunately did not occur. So right now, I think they're mainly in the stagnation category, so call it 64% there. 25% think they will have sort of trend growth, so they're slightly more optimistic. The biggest news ultimately is something you've been talking about, and all of us have, which is their expectations on AI. And there, a large majority expect major transformation of jobs in the next 4 or 5 years.
Meanwhile, Jefferies' David Zerver spoke about the tailwinds for the market from Fed's rate cut. Listen into what he had to say.
You had Powell this week talking pretty dovishly about his belief that those risks you just highlighted are from the Beige Book and from the Fed are weighing into the factors that are going to be moving rates over the course of the rest of this year. And certainly we're looking at least a couple more and maybe a couple more into early next year to really get the rate side moving and the tailwinds from monetary policy easing into the system relatively soon. And that's hitting the forwards, that's hitting expectations. We've got the 10-year almost below 4%, and 100 basis points lower in rate expectations since the beginning of the year. That's a pretty positive tailwind.
And now getting you the latest on Trump-related developments, we have Dia joining in with the Trump-related updates on the Trump Watch segment. Dia, over to you.
Good morning. Starting off with a fresh warning from US President Donald Trump to Hamas. If it continues attacks inside Gaza, Trump said the killing violates the ceasefire agreement he helped to broker with Israel. In a post on social media, he wrote, "If Hamas continues to kill people in Gaza, which was not the deal, we will have no choice but to go in and kill them." Now, Trump has also confirmed that he will hold a second meeting with Vladimir Putin, saying that the talks will take place within 2 weeks or so. The meet is expected to happen in Budapest, and it follows a 2-hour phone call between the two leaders. And in another major move, Trump said that a deal with Germany's Merck KGaA has been set off, cutting the price of its fertility medicines in exchange for relief from threatened tariffs. The White House says it is part of Trump's broader effort to make IVF treatments more affordable. That's all for today, Vinny. Now back to you.
Thank you so much for that, Dia. But let's move on and actually sip into a very short break on that note. We're going to come back and talk about commodities, so stay tuned in for that. Welcome back to Power Breakfast on CNBC TV 18. Time to focus on commodities, and that commodity that has been glittering through the year has been gold. I think it's become our routine, Manisha. Good morning. Gold, new record.
Yes, before you and me say good morning, gold does that good morning for all of us. Yes, yet another record highs. We are up by 64% in this year. $43.80 an ounce is now taken with. So, the way gold is increasing, gaining every day, almost $40 to $60 an ounce, and much of that happens in Asia, does perhaps tell you a story that it is mostly Asian countries and perhaps China doing many or much of this buying. If you look at the silver prices, we've seen 85% of gains in this year. $54 an ounce is where we are trading. And for the Indian markets, it's trading at around 1,70,000 rupees a kg right now. So it's more than doubled in last 1 year when you look at silver prices. And it doesn't stop there because palladium is trading at a 3-year high. Platinum is trading at a 14-year highs, and we have seen some stability coming for copper as well. The thing, the commodity that has continued to decline in this year clearly has been the crude oil prices, headed for a third weekly decline. Crude is down 20% in this year. It's trading at a 23-week lows right now. And not just crude oil prices, gasoline, heating oil, natural gas, everything is trading at a multi-year lows as the markets anticipate that the supplies are going to be more going forward and the demand simply not catching up.
Okay, Manisha, thank you so much for that. Important to keep an eye out on what's happening in the world of commodities. But with that, we're absolutely out of time on this edition of Power Breakfast. Thank you so much for tuning in. Up next, a Bazaar Morning Call.